Hey guys, welcome back to the channel. Stock Rock here. Today I broke down an earnings scorecard for all the companies that reported, well, for the main companies that reported. And I want to share with you the reason, earnings grade justification, why each company got the grade, and explain what the business does, and yeah, a little bit about the business, ticker, sector, etc. Let's dive right in. All right, we have UNH, United Health Group, and healthcare sector. Managed care and Optum Services grade came in with a B for earnings. Scale and services growth supported earnings, but elevated medical costs trends limit margin expansion and keep guidance cautious. Next talk, we have ticker BA, Boeing, Industrials and Aerospace. Commercial aircraft and defense company came in with a grade of a C. Cash flow progress for the business was in line, but production and delivery execution risk continue to persist for the company. And if you're a Boeing investor, you're very familiar with this problem. Ticker RTX is the next company, RTX Corporation, in the industrials and aerospace sector. Defense and aerospace systems is the business. Grade came in with a B today. Defense demand remains solid with backlog support, though supply chain normalization caps near-term margin upside. Next company, we have ticker NOC, Northrop Grumman, industrials and defense sector. The company operates in defense and mission systems. Came in with an A minus. Strong defense spending, expanding backlog, and long-term contracts drove an earnings beat with high visibility. So nothing negative for this company, something I definitely want to look into a little bit more. But yeah, strong A minus for NOC. Next company, everyone's familiar with mostly, UPS, United Parcel Service, in the transportation sector. Global Parcel Logistics came in with a C today. Earnings were largely in line as volume stabilized, but was offset by pricing pressure and limited margin leverage. Next ticker, we have AAL, American Airlines Group, airline sector. Passenger air travel came in with a C plus. Demand remained resilient, but profitability is sensitive to fuel, labor, and macro conditions, keeping outlook balanced. So it seems like a lot of the airlines are having a little bit tough time with their costs right now. Next ticker, we have GM, General Motors. In the automotive sector, they operate in the industrial combustion engine vehicles and EV transition space. Came in with a B. Strong gas vehicles margins drove results, but EV profitability remains uncertain, limiting future margin expansion. Next ticker, we have TXN, Texas Instruments, operating in the semiconductor space sector. Analog and embedded chips is their business. Came in with a C grade. Inventory correction and weak industrial demand pressured near-term results and guidance. Next ticker, we have STX, Seagate Technology hardware sector. They operate in data storage solutions. Came in with a B grade. Improving AI storage demand supported recovery, though the cycle remains early. This is a company I definitely want to look into a little bit more as well. This is that opportunity to really learn about these businesses. Ticker I'm not very familiar with is CVLT, Commvault Systems, in the software sector, data backup, and cyber resilience. Came in with a A grade. Recurring revenue growth, cloud adoption, and operating leverage drove a strong earnings beat. Next ticker, we have FFIV, F5, software networking sector. Application delivery and security came in with a C plus grade. Stable enterprise demand, but modest growth kept earnings closer to in line. Ticker PKG, Packaging Corporation of America, in the packaging sector. Who would have known? They operate in the container board and corrugated space. Came in with a B grade. Pricing discipline supported margins despite softer volumes, resulting in a modest beat. Ticker GEF. Name of the business is GEF. I'm not very sure how to pronounce that one. In the packaging sector as well, industrial packaging came in with a C plus grade. Uneven end market demand produced inline results with limited acceleration. All right, next ticker we have KMB, Kimberly Clark, consumer staples, which has been a hot sector. Household and personal care products came in with a B grade. Wow, impressive. Pricing power offset cost pressures, supporting earnings stability without significant margin expansion. Next company, ticker SYF, Synchrony Financial, Financial sector, consumer credit and private label cards came in with a C grade. Results were in line, but rising delinquencies weighed on forward outlook. Next company, we have ticker LRN, Stride in the education sector, online and blended education came in with an A minus, very impressive. Enrollment growth and operating leverage drove an earnings beat and margin expansion. Ticker ENVA, Innova International in the fintech lending space, company I've never heard of. Online consumer lending came in with a B grade. Disciplined underwriting and stable credit quality supported a solid earnings beat. And last company, but not least, HAFC, Hand Me Financial, banking, commercial banking. Regional commercial banking came in a C plus grade. Stable deposits offset by net interest margin pressure and a slower growth environment. All right, guys, thanks for watching. This is Stock Brock. Hopefully, this helped get you some opportunities to learn a little bit more about some of the tickers, some of the opportunities you can find in the market just by doing a little bit of homework. This is Stock Brock. Peace.